This is Barry Zalma speaking for Claim Schools Incorporated's blog, Zalma on Insurance. Today we speak about a judgment for an insurer because the insured suit was filed late, and why the private limitation of action provision in an insurer's policy defeats the suit against the insurer. This case involves a contractual statute of limitations in an insurance policy. Sidney and Shatika Davis argued the trial court erroneously granted summary judgment in favor of Homeowners of America Insurance Company, HAIC. In Sidney Davis and Shatika Davis versus Homeowners of America Insurance Company, the Court of Appeals of Texas on April 7, 2025, concluded that because 1, the contractual limitation period was valid, 2, the limitation was not told, 3, HAIC did not breach the contract by failing to pay the amounts claimed, and 4, HAIC addressed the fraud claim in its summary judgment motion. HAIC issued a insurance policy for the Davis property. The policy included a contractual limitation period that requires suit to be filed by the earlier of 2 years and 1 day from the date the claim is accepted or rejected by HAIC, or 3 years and 1 day from the date of loss. HAIC's independent adjuster, the IA, met with Davis and his contractor to inspect the property. The inspection revealed hail damage to the roof, gutters, downspouts, and a storage shed. No interior damage was claimed or found. Additionally, inspection of the attic revealed that foam installation in the attic on the underside of the roof decking and framing. The foam insulation was intact, fully adhered, and undamaged, and Davis did not make a claim that the foam insulation was damaged by the storm. HAIC accepted the claim on November 20, 2017, based on the IA's findings, which estimated $19,662.75 for storm damage repairs to the roof, gutters, and shed. HAIC, applying deductibles and depreciation, issued payment on the claim in the amount of $6,612.75. On March 1, 2018, HAIC issued a supplemental payment of $11,591.53 on the claim. In issuing the supplemental payment, HAIC made clear that the payment was based on the contractor's higher estimate, and its position on coverage for foam installation remained unchanged. Davis attempted to invoke appraisals sometime between March 14 of 2018 and April 27 of 2018, but there was no evidence that either party followed through or attempted to timely pursue, engage in, or complete the appraisal process in 2018 or 2019. In an August 5, 2020 email to Davis's counsel, HAIC declined to reopen the claim for further action because the appraisal request was made outside the 2 year and 1 day period required by the policy for filing suit. Davis sued HAIC on August 5, 2020, asserting claims for breach of contract, anticipatory breach, violations of the Insurance Code and Deceptive Trade Practices Act, breach of the duty of good faith and fair dealing, fraud, and conspiracy. The court entered an order granting HAIC's summary judgment motion on limitations in its entirety and dismissed the case with prejudice. The contractual limitation period was argued by Davis to be invalid because it has the effect of imposing a limitation period of less than 2 years as prescribed by the Texas Code. Generally, the limitations period for breach of contract cause of action is 4 years after the day the cause of action accrues. In the context of insurance policies, insurance provisions that limit the time within which to file a suit to 2 years and a day are valid and binding. The 2-year period expired before the 3-year period, and therefore the 2 years and a day provision applied. Moreover, even if the 3-year period applied, Davis's August 5, 2020 suit was not timely filed. Appraisal under an insurance policy involves a contractual process by which the insurer and the insured select third parties to determine the amount of a claim loss when the insurer and the insured cannot agree what the amount of loss was. In the present case, the November 20, 2017 letter was an unambiguous denial of coverage for foam insulation. An insurer's consideration of additional information from the insured after denying coverage does not alter the finality of an otherwise unambiguous decision to deny coverage. Although Davis adduced no evidence to contradict or controvert HAIC's denial of his claim for foam insulation, on November 20, 2017, he suggests that limitation began to run when HAIC made the supplemental payment on March 1 of 2018. The supplemental payment, however, did not include payment for the foam insulation, and HAIC made clear that its position on that aspect of the claim remained unchanged. The supplemental payment did not restart the limitations period, and even if the limitation period began to run on March 1, 2018, Davis would have been required to file suit by March 2, 2020, and his August 5, 2020 petition was still untimely. The nature of the appraisal process is such that it would typically not come into play until a claim is denied. With the claim denied, there would be no disputed amount to appraise. A condition precedent in a contract, like the 2 years and 1 day condition, is an event which must occur or an act that must be performed before a right can accrue to enforce an obligation. A cause of action for breach of contract does not accrue until all conditions precedent to the party's right to file suit have been satisfied. Therefore, the insurer's interpretation of the policy to require performance of the condition precedent before a cause of action accrues is not unreasonable. The evidence shows that the policy condition requiring demand for appraisal was met. The undisputed evidence established that, at best, the appraisal process was demanded but never commenced. HAIC specifically identified fraud as one of Davis's claims, and throughout the motion for summary judgment argued that the policy's limitation period applied to all of Davis's claims. Since the breach of contract claim was time-barred by the policy's 2 years and 1 day limitation period, the extra contractual claims were also time-barred. Therefore, the judgment of the trial court was affirmed. In my opinion, as the court clearly stated, an insurance policy is a contract. Failure to comply with a policy condition, that is, to file suit within 2 years and 1 day of a denial, is clear, unambiguous, and enforceable. HAIC established the suit was filed more than 2 years and 1 day after the claim, was unambiguously denied for amounts greater than that already paid. Every policyholder and policyholder lawyer that wishes to sue an insurer must read and understand the policy, and when it has a private limitation of action provision, must file suit before the limitation provision expires. In fact, most policies have a limitation provision like that in the standard New York fire insurance policy that's only 1 year. This video was adapted from my blog, Zelma on Insurance, which is available free to anyone who clicks on the URL zelma.com/blog. You can subscribe to the blog, and if you do, you'll receive notice of every blog posting, usually 5, sometimes 6 a week. and you'll also gain access to the more than 5,000 blog postings. Please tell your friends and colleagues about this blog and the videos and let them subscribe as well. And if you view these on rumble.com, please click on the thumbs up button. And if you view on YouTube, please click the like button. And if you're interested in further detail about insurance, insurance law, insurance fraud, and insurance claims, please consider for a very small fee subscribing to my Substack publications. Thank you for your attention.